Thanks for everyone coming here. And today I'm going to talk a little bit about my research, and it's about human dynamics and financial markets. Okay, how does these two things even connect together? So if you really think about financial markets, think about what is driving everything in the financial market. There's a lot of rational thinking. If you are a trader, a professional investor, what you do is think about all the information available and make the best decisions on what to do, what to invest, on what stock to long, what stock to short, right? There's also a lot of irrational psychology behaviors people have been thinking about for a long time, that, just as humans, we have emotions, we have this, irrational part of us, and we often exhibit that in professional life, like investments. But what I'm really interested in is to explore another unique aspect of financial markets, that there are a lot of social influence, that's, in the financial markets. And I think it's also one major component of financial markets, okay? And it's just the nature of human beings. It's all other research about people talk to each other, and that make a huge, huge difference. If you don't believe me, you think people don't talk, in a financial market, you're wrong. So if you have ever sat on a trading desk, that is, if you go to a big investment bank, you go to a major asset management company, you will see someone sitting there trading on the stock all day. And you will see, besides these fancy screen setups, they have an extremely fancy phone. And that's, you see, I circle out that. So people keep constantly talking to brokers, to other people, to their buddy in the market, to other side of the market, other side of their potential deal. So they actually talk a lot. There's a lot of information going through between peers in the investment world. The way I started this research is through a special brokerage firm, which is called the eToro trading platform. It's just like E-Trade, if you like, but it has basically you can buy and sell securities, for instance, oil, for instance, currencies, on this website, put in some money, and you can trade it at your home desk whenever you want to. So it's like an online brokerage, E-Trade type of brokerage. But what is unique about this eToro platform? It's interesting is it creates this Facebook kind of atmosphere on the platform. For instance, you can do two major things on eToro, which you cannot do on eTrade or other online brokerage account. First thing is you can copy a trade, so you can actually have a screen, keep going live update of what other people are trading, what kind of trades other people are placing, and you can click any of this trade and you can copy that trade. The other even more interesting you can do on eToro is you can mirror some people. That is, you can find some other trader, look at their profile, just as you look at profile of other people's Facebook page, and you can basically copy that trader. Basically, whatever the trader is going to do in the future, it will be automatically done to your account. So you basically give all your money to that trader, and acts on he acts on your behalf on your money, and that we call it a mirror kind of behavior. So you can do these two amazing social things on eToro. As a matter of fact, if you count in all these transaction fees, on average, people who actually mirror the guru traders actually make some money on the platform. People copy other people trade, make less money. But if you trade alone, on average, you actually lose some money, and you lose the most of money among all these three on different type of trades, which is a really surprising result. Because if you think about that, if you think about that, social mechanisms really play a role in making money, making rich or making poor. In traditional financial literature, all the pricing theory today we're using every day to price options, we assume this kind of random walk or complete randomness of financial markets. Things move randomly up and down based on based on the current information, a lot of randomness. But it's not true. We know that the market is random. It's not random. There's up and there's down. There's bubbles and there's crashes. And we did a lot of research based on this data, and our major findings is very interesting, is that we find that based on this social influence, with a lot of non-randomness, with a lot of market behaviors that can be explained not by the irrational thinking, not by certain kind of events happening in the world, but really by people influencing and talk with each other and getting information from each other. And that's a really, I think it's a very exciting new idea, new perspective of understanding financial dynamics. Obviously, you will ask, what can you do with this kind of information? What can you learn more by looking at people's influences on the financial markets? One thing we did is, for instance, you can correlate how people respond by other people's, how people change their idea, change their mind after influenced by other people, and correspond that with actually the future price movements. And we see with significance that you can predict certain future movements by just looking at how people act on their investment behavior socially. And I think that's the end of this presentation, and it's really where we want to go, is to explain all this mysterious market behavior with a new perspective of thinking. Thank you all.